What is going on, superstars? It's Sam Keys here again. Welcome back to my channel. In this video, I want to talk about order blocks, and I want to show you how you can apply the order block strategy in trading volatility indices, and you can also apply it in trading forex currency pairs and commodities. On this video, we're going to focus on volatility 75. That's what I'm going to use to have this lesson, and you can go on to practice this strategy on your other assets. Okay, if you're new to my channel and you'd like to learn more about trading, hit the subscribe button and also drop in the comments your name and where you're watching this video from. As a welcome gift, you can check out this playlist up here to see if there's any video that's going to be helpful to you. With all that said, let's get started with a tutorial. With over 20 years of experience, Deriv is one of the world's simplest, flexible, and most reliable broker for trading forex, commodities, stock, and synthetic indices. They give you 24/7 trading, sharp prices, tight spread, and over 100 tradable assets. I trade with Deriv, and it has been a very exciting experience. The user-friendly platform makes it easy for beginners and advanced traders to carry out all operations. Click the link on the description of this video to create an account and start trading your favorite assets. Now, one of the things I love to do whenever I want to trade the financial market is to get a view of the market on the daily time frame so I can tell where exactly price is headed. So if you get to look at price on the daily time frame, it's going to give you a scope of what the market has been doing over the previous days and weeks, even the month that we're into. Okay, and it's going to tell you what kind of structure that we have in the market. Now, literally from the daily time frame, we can see that prices actually broke a diagonal resistance at this point here. It has broken it, so we have a break of structure around the zone and prices going upwards towards a particular level. And if you want to duplicate this, let's add another one to get the support level of that same trend line. You can see the support level right here. So I'm just going to introduce an arrow tool. Right, I'm going to use it as my pointer on this video. So we have the resistance at the top here. It's a diagonal resistance. That's a trend line. And we have the support, which is a diagonal support right there. So we have price playing around this level. You can see we have lower lows. You can see we have lower lows right here. But at this point, we had a break of structure, price creating a higher low at this level. So I'm just going to introduce another trend line right here so we can just apply that. Now, the basics of technical analysis is what every trader, especially if you are a beginner, you should have understanding of. Technical analysis is all about support, resistance, and trend lines. Then you go into market structures and also charts, right? Market structures, types of chart patterns, and all that. Now, I will do a particular video for that, and I recommend that you just stay tuned to the channel so you get to know when I upload that particular video. Now, let's look at what the subject matter is today. Today, we want to learn about order blocks, and we want to see how we can apply this order block structure, right? The order block strategy to trade the market. Order blocks are actually price reversal structures, right? They're price reversal structures that we get to see in the market that tells us if price wants to reverse. Perhaps if we have this movement from here to this particular point, right, and we're expecting price to go up, there's something we'll always look out for, and that is what I want to show you on this video right now. So let's go on to see what an order block really is. Now, take a look at this. You can see that we had a swing from this point up to this level, and price did something. Price retraced back down to this level. And another thing we did have on the charts is that price moved, look at this, the swing down to this point, and it retraced back to this level. Okay, so when you want to talk about order blocks, all you need to identify is the bearish to bullish candlestick or the bullish to bearish candlestick. Now let's see this. So this is a bearish move from the top here to the bottom here. To get the block where traders get to identify for a buy position in this particular place, all you need to do is to get into that chart, and then you spot out the zone where we had the what? The bearish to bullish candlestick. And oftentimes we get to look at this to see engulfing candlesticks. If you have an engulfing candlestick, like for example, we have price falling from this point to here, and we have the bullish candlestick engulfing the real body of the bearish candlestick, then that is very, very good, right? It is very good. So all you want to do is get on to map out that zone. So you can easily do that by getting, let's see, I'm going to use a rectangular tool right here and just get out that zone. You can take the opening of that candlestick. If you see it, any time frame that you see this, whatever time frame that you see the reversal, oftentimes you see it in the larger time frame, maybe 1 hour or 4 hours. Whenever time frame you see that, and you can spot out an engulfing candlestick or something that you have just a huge momentum towards the upside, right? You just spot out the last bearish candlestick. This is what we're dealing with here. We're talking about the bear here, right? The last bearish candlestick. I'm going to cover up from the real body down to the last week that we had there, right? You just map that place out. You can see we had a rectangular block right here, and that is what we're calling the order block level. So price coming from this point up to this side, it's going to be identified as a zone of price reversal. Okay, that is a zone of price reversal. You can see that happen there. And also, if you take the arrow up to this particular point, you can see we had something similar right here, right? We had something similar here. You can see we had this bullish candlestick. It took the swing from the bottom here up to this point. This was the last bullish candlestick. We had it, and we have the bearish candlestick starting up from here and taking price downwards. Now let's see the 1 hour time frame. Let's identify the kind of structures that we have at that particular level. On the smaller time frame, we could see clearly what exactly was happening. So if you don't want to give a very huge risk, you just want to drop the time frames. If you don't want to give a huge risk, you want to drop the time frames. And I'm just going to spot out this level where we have this particular wick here and this other candlestick. I'm going to pull it out from here to the right side, So I don't need this. Okay, I don't need this rectangle, so I'm just going to bring it down a bit. I'm going to use a horizontal line to just spot out that zone. So we have this, right? We have this, and then we have the other one at the top. So I'm going to go up to a higher time frame to identify that level. I'm going to go up to identify that level. Okay, that is it up there. What we're really trying to looking out for on this particular market is to see when price gets into this level. And it's all about traps. If you ask professional traders, especially those who trade using pending orders, you're going to see that we just wait for price to get into this particular zone. And when it gets to that zone, we look out for a sell. We look out for a major reaction, just as it has happened in the time past, just like it happened here, right? Just like it happened at this particular point where there was a reversal. And if you want to hold your positions long enough, perhaps you're a swing trader, right? You want to get into that particular level, and then you take your sell, putting in your stop loss just above here. But that is not enough. Okay, I'm a practical and realistic trader. So I'm going to show you how you can apply this strategy. We're going to go back to back test, how you can apply this strategy, and you're going to get very, very profitable entries, right? Profitable entries that's going to give you huge profits. Good, I have a particular level here. This is on the 4 hour time frame, and we can see something here. I'm going to bring in the rectangular line tool. You can see this level here. Can you see that? This is what we're talking about, the order blocks. This is it. So we just spot out the level where we had the last bearish candlestick, and where we then had the new bullish candlestick, and you can see it engulfed. That means it covered the entire size of the previous candlestick. So I'm going to zoom in a bit so you're going to see it clearly. You can see that. Let me get the crossbar tool. You can see this particular candlestick. So this is the last one. This is the last bearish candlestick. So we're going to get the entire size of it, and you can see the next candlestick that follows a bullish candlestick. And look at exactly what happened. Come on, guys, look at exactly what happened. That gave us a zone. Anytime price got into that zone, it got rejected and took it back up. And you can see in the future, let's go over to the future. Let's see. Did you see that? Did you see that? Let me get this. Look at this. Look at this. It got into this particular level and back up again before the final breakout. It got in and broke it out to the downside, right? So that is it, especially the second touch. Whenever it comes into that level a second time, this is the first time it got to the level again, the retest, first retest, the second retest. Okay, the next one, you just want to avoid it. You just want to avoid taking that trade again if price attempts there. And why you want to avoid it is if you understand the market structure. Remember, when I teach about market structure, I get to tell you about the higher lows and lower highs and so on. Now, the market structure here was showing us, I'm talking about here, look at this. I'm talking about this level here. Around here, price was giving us a structure for a downtrend, right? A structure for a downtrend. This was a retest of the zone where we had the order block, right? And price went back up. But this time, it didn't go above the previous high. It was below the previous high. And that is a structure for a downtrend. And with that, we had the lower highs continuing till the breakout towards the downside. And that's it. So if you want to get diagonal 2, you're going to see this. You see we had a trend. So right here, we have it clearly at this point here. We have the downtrend structure, and that is what showed us that price was going to break to the downside. Okay, and that is it. Whenever you have this retest up to 2 times in this particular zone, please don't trade it again. All right, don't trade it again. You can take your time and just go through the market, go through the charts, and see how you can literally trade these particular patterns. Now, I want to show you the entry technique. I want to show you something very powerful that you can use to get a very powerful or a perfect entry using this order block structure. Now, let's see it. Now, to get your entries, if you've been following my teachings, you would understand that I get to talk about entering the market on you enter the market on the smaller time frames, the 5 minutes or the 1 minute time frame, right? Because you're going to see exactly what is happening in the market at that particular time. So I'm going to get a vertical line. I want to get this pattern. I want to get the zone, and I want to get the zone too. I'm doing this on my mobile phone, so you can also do it on your mobile phone. So I want to look at this particular market on the smaller time frame, and that is why I was trying to get that right here. So let's go back to that point where we had that line, the vertical line. Okay, this is where I was going to come. So I want to show you something. This is on a 30 minutes time frame. Okay, I want to show you something, how you get to get confirmation that will show you that price is indeed going to go upwards. I'm going to show you that now. You can see it on the smaller time frames. Like I said, on the smaller time frames is what you're going to look at. So we're looking at 30 minutes here. Remember, this is a swing trade. So 30 minutes is quite fine. If you go further in the 15 minutes, you're going to see it. If you go on the 5 minutes, you're going to see it. Now I want to show you something. For you to get a perfect entry using this structure, so that you don't get into the market and price keeps going down and you're seeing your account in red and you'll be like, okay, the stop loss is there. If it happens, let you just take it, right? The way I trade, I love sniper entries. Okay, I love sniper entries, and that's what I want to show you here. We're looking at this on the 30 minutes time frame. Remember, this is a swing trade, and for us to get this very well and very correctly, right, we need to confirm something in the market. And one of the things I want to do is to introduce my indicator, which is the MACD. The MACD, and the settings or the parameters for this MACD is 1226.5. Let me just show you how to put in the settings. So I'm going to introduce the indicator. So we're going to have this. You just go downwards till you see MACD. Good. And you can see the fast EMA 12, the slow EMA 26, the moving average SMA, that's MACD SMA 5, you have applied to close, and so on. It goes down, everything remaining the same. The levels don't do anything yet. Done. So we have applied it. Now I want to show you how to use this. The MACD is a very powerful tool. I'm going to do a video on how to identify divergence using the MACD indicator. So If you want to watch the video, ensure you subscribe to the channel and then you hit the bell icon, because that way you're going to get notified when I make a new upload. So let's see this. It is a very powerful tool, right? Why do we call it a powerful tool? It shows us divergence and convergence. It tells us when the buyers are getting weak or when the sellers are getting weak, when the momentum towards the top side is getting weak and when the momentum towards the downside is getting weak. That is just it. Now you can see the price was coming down. We had this deep movement, right? The deep swing coming down to this particular point, and there was a level where it started getting weak. You can see we have shorter candlesticks around this place, consolidation, and price, they forced it downwards to give us a climatic move. At the end of the climax, we had a candlestick with a long rejection. You can see at this bottom here, there's a rejection here, and that was the very last. Before that, we had a flat bottom bearish candlestick on the 30 minutes, and we had this showing a rejection. The bullish candlestick showing us a huge rejection towards the downside. Now, to apply this particular indicator in getting your entries, all you need to do is identify the convergence. Look at this. We have lower lows right here. Price is giving us lower lows. But on the MACD indicator, price was giving us what? It was giving us something. It was giving us higher lows. Right? That is what you want to look out for. And when you get into a particular structural level, let's see if I can, I really wish I could just spot out this particular level on a higher time frame. Let's see if there's a reaction around that zone. I'm going to get this. If you have a support, a resistance, or a trend line around that zone in time past, then that becomes very key. That makes it a key area. Do you see what I just identified around this point? Follow me, guys. If you follow me, you're going to learn how to trade and you're going to be a master of it. This is the point where the reversal happened. In time past, we had this as a resistance, and the resistance was turned into support around this level. Kept going back up, broke down, and also it became support here and up. Now it's coming back here to test for support. That makes it a very key level. And that's why the first thing you want to do is to identify support and resistance. Your technical analysis comes first. Okay? And this is also part of technical analysis. All right. So that is it. Let's go back to the 30 minutes and we're going to see how to just get that in. If you understand the directional bias of a market, all you need to do is to execute the trade with your proper risk management. If you understand that, okay, price is about to go up, everybody, all buyers, come on, let's get into the market. I can see the MACD, I can see the price has gotten to a key level. All right, it has gotten to an order block level. Come on, guys, let's go up. Don't go up blindly. No strategy is a holy grail, okay? You just want to go up and you have your risk. You have your risk checked. All right, I'm going to do a video that's going to talk about risk management and everything, okay? Ensure that you are tuned to this channel. Right, you're tuned to the channel so they don't miss any video. Now, how do you get in? Simple. We have seen this convergence, right? You can see the price was going downwards and here price is going upwards, right? It was a very good indication. Then the type of candlestick that you now see, you see the one that's giving us that rejection there. Now let's go further into the 5 minutes time frame. It's going to take a long move, but I'm going to get there. Now we saw that on the 30 minutes time frame, and now we are seeing the rejections more on the 5 minutes time frame. These are what I'm talking about, right? These are what I'm talking about. That is it, guys. Wow. Can you see? On the 5 minutes time frame, we have something else. Look at this. The convergence became stronger. Wow. When you have convergence on several time frames, convergence is for price to go from short to long. Let me show you that. Let's say, for example, price is going, convergence is what you expect, is indication that tells you that price is about to go long. The direction of the MACD is what tells you where price is going. Okay, so we're looking for convergence, but in the case of price going downwards, we're looking for divergence, and I'm going to talk about that in some other video. Just stay with me on this. Now, can you see this? I want to show you something. I want to reveal something powerful to you. This level was about equal lows, right? This level was about equal lows right here, but on the MACD we have higher lows, and this gave us a confirmation. And the next thing that happened in the market was price established something. It established a higher low on the main chart. Look at this. Can you see? It established a higher low on the main chart. And after this higher low came up, something happened. There was a break of structure, a BOS. That's what it's called, a BOS. There was a break of structure. I'm going to show you the zone where there was a break of structure, right? There was a break of structure. Let's get this. Let's get the, where is it? The rectangle. There was a break of structure of this high, right? The high right here. Look at this. You can see the high here. It was broken, and price gave us a what? A higher high here. And that higher high moved on to give us what? A higher low. And that is the formation of a new structure in the market. So the entry point from this could have been number one at this level here at the bottom. I'm going to get an arrow too. If you've been watching my videos, you're going to learn that I really take my time to explain every strategy in detail. So don't miss the details, guys. That is what is important. It's more important than the video itself, the details. And in case you miss any part, you can always rewind and watch it again. So we had this level, then here, first entry point, the second on the retest, the third, after price breaks out of this, you can see this resistance down here, right? Let me just get a horizontal tool. You can see the resistance here, right? Price broke out of it around this level, then came back to retest inside the zone again, and back up it's going. Remember that we spotted this order block level on the higher time frame. So we are now seeing what is happening in the smaller time frames, right? And that was what gave us the move. And wow, let's see how many pips. Wow, how many pips the price go with this move. Look at this, guys, from here to this point. Let's take it to just this point here. Let's not go too far. That is, wow. Wow. That is about 5,843 pips. And it keeps going up. But you're going to take this as a swing position to hold the market long enough. So if you see the order blocks, if you see the structures in the higher time frame, just know that you're going to hold your position longer, right? And you're going to make more profits trading that way. If you find this video helpful, please give it a thumbs up, and also drop in the comments your questions and what you like most about this video. Thank you for watching. My name is Sam Keys, and I'm always here to help.
Nothing can stop me, I'm all the way up.